Let's see what British pound has in mind for us. Here we can see that on the daily chart there is a long-lasting consolidation. Same on the weekly chart, not really many hints here. The indicators though are in the oversold territory on the weekly chart and kind of recovering on the daily chart, though we don't see any strong recovery momentum here. The moving averages continue to slope to the downside, but they are rather far from the current prices, and the possibility of recovery still exists. Still, also, we don't see much bullish momentum on the 4-hour chart. Here, the moving averages are getting more and more horizontal, and it seems that the market is in the wait and see position, unwilling to make big positions. This week, the Bank of England will meet on Thursday. All in all, better economic figures released so far made the market think that the central bank won't do additional policy easing. The Bank of England's Governor Mark Carney has recently said that the central bank's efforts had a positive impact on the Britain's economy and that there were limits to the central bank's ability to ignore the effects of depreciating pound on inflation. The regulator will also release a quarterly inflation report with the new quarterly projections for growth and inflation. This data will be really important for the market. All in all, we expect that the Bank of England's meeting will be rather non-committing for the Bank of England. We probably won't have any new monetary easing, though the Bank of England would probably remain cautious and still have the option of increasing monetary stimulus in future if needed. So some mild negative reaction is possible in the British pound. So far, expectations that the Bank of England will remain on hold provide some support for the sterling, but Brexit fears don't let the British pound to show any significant recovery. We will be also watching UK PMIs, which are due this week, and this is what should be looked at from the fundamental point of view. All in all, we can see that the daily chart, British pound has made a lower high last week, and a resistance which is located in the area of 1.2270, 1.23 looks rather strong. It closed below 1.21 mark, will confirm the resumption of the downtrend and open the way for a decline to 1.20 and 1.19. Note, though, that the amount of short positioning on the British pound is very high, and short covering may trigger a sharp short-term rebound of the British currency. But taking into account the fact that last week there was some decline in pound shorts, it was moderate. Maybe this short covering won't be a serious factor. If the Bank of England sounds less and less dovish, then yes, there is a possibility that a short-term spike in British pound may happen because of this short positioning. In this case, the bigger resistance for British pound is at 1.25, and I don't believe that bulls will be able to push the pair significantly above this level as long as there are still serious concerns about the British future and concerns related to Brexit. So we will have a look at the mentioned support levels. Here we also have this weekly pivot indicator. For now, British pound is trading at the positive territory as the indicator is at 1.2181 levels. You can see this indicator also provides us support and resistance levels. Resistance is located at 1.2280, 1.2370 and 1.2470, while further support is at 1.2091 and 1.1992. I do recommend you to use this indicator.